You might hear an evil hissing in the background. Don't worry. Anyway, so let's talk about inverse funds. I want to call this video Inverse ETFs and Idiots. Okay. Now, because you've seen me create the Tesla sandwich, everything I do, first of all, we subscribe. We all know. We subscribe to this channel for strategies, not spreadsheets. Okay. So, part of my strategy was to hedge my large AMZ position. Everything is strategic. I want to say thank you to a reader called, or a reader, like I'm like in a magazine, to a subscriber called named Gerald, who sent me this email. Take a look at this kid. It seems he may have found a hedge, or so he thinks, for YieldMax. Yes, he stole your idea. Now, I've seen this kid on YouTube, okay? And he's like a citizen. He's like all of them. This space is so beta male. Let's get with the strategies, all right? Number one, I'm not going to beg you for likes, but you must subscribe. There is a pot of gold for you. We are very close. Once we get 10,000 subscribers, it's no big deal. My other channels have like 55,000. It's nothing. Once we get to 10,000, I will make you a Discord that will rival any dividend income ETF Discord you've ever seen. Shout out, I don't know if I'm saying your name right, but shout out to We Are the Kilmers. Really, really great YouTuber. I'm all on his side. We have similar beliefs, okay? We are the dividend ETF army. All of us together, a force united. Let's see. Now remember, I created the Tesla sandwich, and it's genius. Shout out to Ethan out there who mentioned me. Okay, now the Tesla sandwich, let me just give you a brief rundown, and then I'm going to break it down why you can't just randomly buy inverse ETFs. Because what if you're wrong? And you're utilizing your firepower buying stupid ETFs that are not going to give you the goal. What's the goal? Everybody from We Are the Kilmers, what's the goal? The goal is as much income as possible. Of course, we want to avoid NAV erosion and all of that. Today, we will discuss inverse ETFs and idiots. So, the reason why I picked Tesla as my... Now, Tesla and Crash go together beautifully in not even share counts, but dollar amounts. Okay? Even if you love Tesla, there's so much volatility, both up and down, okay, that you will make money in both directions. You see, let's look at it for what it is. You can long a stock and short a stock at the same time, and they would kind of negate each other. In this special world of high-income, monthly paying dividend ETFs, where the growth is turned into spendable monthly income, that is a huge difference. This gives us the ability to pay back our initial investment and live off the free proceeds forever, as long as you're not stuck in an endless loop of something stupid like random reinvesting or dollar cost averaging. I know that may seem shocking to you, but this channel is shocking. Let's take a look at this. Now, where did this kid go wrong? There are ETFs. Let me see. There are short inverse ETFs. Now, the reason why Tesla from YieldMax works so well with Crash from YieldMax is we do not look at them like a normal long and short. We look at them as two separate entities. In a unique situation, both fund managers try their best to maintain the NAV with their strategies, but mostly the company is called Dwarf Throwers, YieldMax, for a reason. They try to give you the maximum yield, okay? And that's right out of the mouth of J himself. Okay? Anyway, so these indexes that you see here, these not indexes, ETFs are short. They're inverse leveraged ETFs. They have the same problem that I have with owning stock. Okay? Owning stock is stupid. This is the new paradigm. You can own $1 million worth, I don't care how much you own worth of Amazon or whatever. You have to make a decision. At what point do you sell it? Yeah, you could do covered calls. You could also wash my car for me instead of me taking it to the car wash. We're talking about totally passive. Who wants to learn? Most of us here know, but if they don't know, who wants to learn about theta and decay and contango and all the different things in the money, out of the money? All right, do I buy a put? Do I sell a put? People are all confused. Let the people, professionals do it for us. Okay? Trading your own options without knowing what you're doing is like trying to fix your own tooth by pulling it out instead of going to the dentist. So, all of these inverse ETFs are as bad as holding a stock. When do you sell it? What if you're wrong? The guess factor comes in. That's the problem. These don't pay you a monthly dividend. Okay, it's like holding a stock. If the Dow goes up, this goes down. If the Dow goes down, this goes up 3 times the amount. Great, when do you sell it? Right? So, I take you back to Tesla and Crash. 2 separate funds, an objective to create as much yield as possible. One looks to do it in the upward direction. One looks to do it in the downward direction. The reason why they work so well is both of them are around $20. And both of them are trying to make as much yield as possible. So if you put them together in equal dollar amounts, let's say 10,000 and 10,000 or 50,000 and 50,000, okay, it's not so much the NAV, the net asset value. No, they're both going to go up and down like anything else, except both of them are going to individually kick out income. Okay? Monthly income. In its first month, Crash, compared to Tesla had a decent month. They've had much worse. So when Tesla had a decent month and Crash had its first month, Crash did exceptionally well. Crash made as much dividend as AMZ, 95 cents. And what happens? Let's just say, I know you don't want to hear it, and you've all seen it with Tesla going down, right? What happens if Tesla goes down? Well, guess what? Tesla is going to pay you dividends. Yeah, I know you want to hold that because you have an emotional attachment, because you have something wrong in your mental faculties when it comes to investing and separating your emotions from your investments. It's okay to drive a Tesla. It's okay to like Tesla, but we don't have to invest in what we like. Okay? Anyway, I was going to say something, but it's bad. Anyway, I'll let you all use your imaginations, but it did have to do with vagina. Anyway, so you understand what I'm saying? What does this all mean? If you have an equal dollar amount of Tesla and Crash, they're going to fight each other. Okay, some months, just like if you held just Tesla, you have a single risk, okay, that it could go down. I mean Tesla, let's consider them one and the same for this conversation. Okay, yeah, it can go down, but you're getting dividends. But instead of reinvesting, which is taking your new money and throwing it after bad money in hopes that one day it'll all be worth more money. So reinvesting is for idiots. I have a better strategy, but that's not for now. Pay attention. My videos are like a podcast. So you can go about your day and listen. If you have YouTube Premium, you can turn the screen off. That alone is worth the price. Having no ads, I have no link. I have no benefit of this. I don't care. I don't get money from YouTube. They don't pay me. They don't like me. I don't care. I don't need anybody's money. What I'm telling you is you can't just half-ass inverse stuff. Okay? This is stupidity. The big inverse that I'm looking for, and I'm going to tell you about right after I shoot this kid down, okay, is going to be the ultimate, the Coney Fiat inverse. And I will give you the specifics for this inverse move. This has the equivalent money or fund producing power that Tesla and Crash have together. You can't just randomly, like, some people are like, oh, I can't wait till the Chips comes out. Do you know what Chips is? You probably do because you're a little chubby, but not those kind of chips. Okay, I'm talking about YieldMax is coming out with a inverse NVIDIA called Chips. Now, why would I not be so interested in that if it does the same thing as the Tesla sandwich that I created? Well, I wouldn't be so interested in that because I'm not so sure about the future of NVIDIA. Okay? Now, what do I mean by that? I don't think that I think that Tesla has a better chance of going down. Okay, the only thing that holds it up is Elon blowing smoke up your ass and telling you stories. What can save Tesla is their money. Okay, they have stupid, shitty robots now and stuff. Other little startups have better robots, and the truth is that Tesla could just buy out all those little companies. So that's your hope. Okay, but other than that, the stock is garbage. Electric cars have lost their appeal to the masses unless you drive one. Then of course you like it. Wait till you try to sell it because Elon's selling them cheaper than they are used. All right? Question about that. Just something to think about, right? Is he lowering? Because, they lowered the prices of the cars a lot, right? Are they really lowering the price of the cars? This is like the chicken and the egg. Tell me in the comments what you think. Or were they just selling you a fucking cheap car for a lot of money before? Think about it. Are they really lowering the prices? Or were they just selling you a cheap car for a higher price? Oh, that Elon. So all of these kind of inverse things are like holding a stock. They're not going to pay you. And if you're wrong, they're only going to go down. And how many times have you been right in your life? Not that many. And I don't think that this kid is right either. Okay? Let's see. You ready? Now, his big idea is to buy one of those inverse 2x, 3x funds that does not pay you a dividend. So there's no point in it. He's guessing. You buy, hold, masturbate, and pray. What? That the market goes down? That's a hedge? It's not. The new era of hedge. Don't even subscribe to this kid. For me, you do this. For him, you do that. Okay? Anytime you watch Retire on Dividends and he asks you to do the thumbs up, you make sure you do thumbs down. No begging allowed here. Okay? Look, he's saying it does nothing but deteriorate. So, you don't want to just get a regular inverse because if it's not paying you a monthly dividend, it's wasted firepower. The more you diversify, the more you dilute your firepower. Why do you think I'm all in on AMZ? Shout out to the little guys out there. Shout out to people who are not taking this as financial advice. Shout out to the people who are being whores on margin. Shout out to all of you. Moment of silence for the schmucks and spreadsheets. For the man with the birds in his head. Okay? Counting the pubic hairs on Jay's ass. Okay? Wait, I heard he's going to New York to their office. You know who I'm talking about. They're going to toss him against the Velcro fucking dartboard. I already paid off Jay and everybody. They're going to take their retard on dividends and they're going to dwarf to us and toss them. It's going to be fucking epic. Now let's listen first of all. Who are you going to take advice from? Always remember this. Okay, when you're listening to somebody younger than you talking about investing. Because when you were young, you did a lot of stupid things, right? So, let me drink my tea. the finest of all the land. This kid's about to make all his life mistakes. Why would you follow him? Listen to this stupidity.
All right. Hello, good morning, good evening, and good night. I hope you guys are doing.
First of all, what the fuck are we? What are we, a fucking radio announcer? Hello, good morning, good evening, good night. This is CBS News. Drop that shit, kid.
Absolutely fantastic, because today what we're going to be talking about is a YieldMax strategy, a YieldMax strategy that I pretty much just created, which I'm going to implement.
He pulled it out of his ass, and it sucks because he don't have that much money. He's gonna buy an inverse. We don't know if there's gonna be a bear market now. What if it keeps going up? Then he's gonna have to take this video down and be wrong, and he lost his $6. The reason why a crash works is the dividend, stupid. It's the dividend, stupid. Okay, you understand?
In a new trading account. So what I want to talk about today is this strategy using YieldMax and a 3 times bear SPXS stock, which is a stock that goes 3 times bear on the S&P 500. Basically, what I'm going to explain in this video is how we're going to use this 45% dividend yield and this 3 times bear stock on the S&P 500 to generate huge monthly income, but at the same time prevent our losses. So what we're going to do is I'm going to show you a few different examples using these two stocks and ETFs, and I want to show you guys how you can protect yourself on the downside with YieldMax and potentially still earn some great dividends. So if this does sound good, we're up to 5,033 subscribers. Our first video.
When I get to 10,000, this is bullshit. Subscribe to my channel. When I get to 10,000, I'm going to give you this good like no other. This kid doesn't know what he's talking about. All right? This is not a fucking hedge. He's going to, it's like guessing and buying a stock. There's no strategy here. You gotta get the YieldMax dividends. You gotta compare it side by side with Tesla. Why? Tesla's a freak factor. It's a company that has a lot of stories, hope, and promise, but in reality is not making a lot of money and doesn't have the market cornered. But they do have the greatest weapon on Wall Street. The greatest weapon has always been the winner who tells the best stories. And Elon wins that hands down. Okay, so that's why you put these two together, not for this crap.
Thank you to everyone who subscribed. 340 subscribers in the past 28 days. I want to say I appreciate you guys.
Oh my God, just get to the point.
I invest in YieldMax, and maybe you guys invest in YieldMax yourselves.
Shut up, kid. You're an idiot. All right, you're gonna give up some of the money that could be making you dividends. All we're about is monthly income, right? I mean, that's it. That's all that matters. Growing the income. We're growth investors who want to get paid now. So this is a terrible, terrible, dishonorable strategy. Okay? So let's get back. Let's get rid of that. We don't need this anymore. Let's see how my day went with my things here. Unlocked. Now remember what's really nice. Oh, I'm up $5,000. Okay. So now you know I margined this all to the tits, right? I put, in reality, it's $150,000 HELOC and then $100,000 out of my pocket because it was doing so good. So I'm controlling over $500,000 worth of stock. But look what happened today. It's so nice, right? Exactly what was supposed to happen. AMZ went up and I'm holding 2,000 shares of Crash. They only went down $400. You want to see it in percentage? Here you go. Okay? Balance things out beautiful. The end of the month, the AMZ is going to pay me about $24,000, okay, in dividends. 25, whatever it is, okay? And then Crash. See, I didn't just pick an inverse. I picked Crash because it's first month when Tesla did pretty okay. They got 95 cents. 95 cents is as much as AMZ. Now, if everything goes down, Tesla's going to go down. Everything's going to go down. Okay? AMZ's going to go down. YieldMax, every index, everything will go down. We must weather and prepare for the storm. We will do that and be fine because we will be getting dividends. Well, stockholders will be getting nothing. My 2,000, which is worth about $40,000. My 2,000 shares of Crash could go fucking wild and pay me dividends. I don't care. And here is the aha moment. You can hear the angels sing in the background. Okay? That was my dividend this month. It was 19,000. It was like 20,000. You know what? They let me buy. So I look at that, the dividend. I just didn't take it. I paid just the $1,200 principal on the HELOC. I mean, interest. I paid the Robinhood 6.25 out of my account. But you know what? I have about $33,000 put aside already. And this month, I decided, let me sacrifice one dividend. And since they're willing to let me double it to like 40,000, let me put it all into Crash for free. Get an additional $2,000 a month. Okay, here's my little worksheet. I know I'm so simple, right? My total cost to run this bad boy is $2,495 a month. $2,500, right? Total cost. Now, I'm gonna make. I can make 69 cents a share. I don't care. I'm still fine. Can make 30 cents. I'm still fine. But I made 97 cents. Now I made 95. Right? You know, that means that after all my expenses, there's $22,000 a month in principal. Almost 23,000. Okay, and we must not forget. Okay, here we are. Here we go. So my AMZ dividend minus my monthly costs is better than having a fucking apartment building. Okay, leaves me with an extra $20,000 to pay principal, to do whatever I want. Okay. Oh, and so this month I took the 20,000. See, scroll down here, right? I accumulated some money in the bank for cushion. For me to get a margin call, I mean, the earth would have to probably break. Okay? This month, my 22,000 Robinhood Stacy'd me and let me double it. So I took that and I made a sandwich. It's a vegan sandwich. It's all Crash. Now, you understand why my plan is different now? Let's talk further about this. Here, you can read this. All right? Now, and I talked to my financial advisor today. He gave me some crap like, oh, put 6K to... I turned around. I said, get the fuck out of here. Right? So, it's so funny. Hold on. So I told my financial advisor, he's like, look, you can afford it anyway. He goes, you're all levered. Might as well go for it. So he knows my whole plan. He thinks it's hilarious, but he says, you know what? This could really work done the right way in the right time. So this month's dividend, I decided to buy Crash. So I get a bonus $2,000 every month because last month I paid 95 cents. So that's about $1,900. So it's funny because my Crash alone on a good month could pay almost all my interest costs and everything. Isn't that crazy? So that's what I'm doing. Okay. Now, if you think about this, and I started this with no money out of pocket, right? I could have 40,000 if my dividend is going to be 24,000 a month. I could have about 40 grand a month to invest in whatever I want. Okay. Let me tell you, AMZ, the 24,000 shares of AMZ, I'll never reinvest in that. I'll never do anything with that. I like what it pays. I like where it is. I will have that forever. When it's paid off, it's like forever. It's like an apartment building, okay? That maybe sometimes it'll go up and down. It'll need some maintenance, whatever. I don't know, right? But they always pay. My costs are low and nobody ever calls me. And this bonus thing down here, this Crash sandwich I made, okay? You know what that is? My bordello. Everybody needs to have a little fun. So down the street, I invested $40,000 and I opened the House of the Rising Sun. And it's starting small. I only got 2 or 3 girls working there, right? I'm giving them most of the money, and they're paying $1,900. Well, yeah, paying $1,900 a month. Okay, and you know what? It's paid for by the AMZ Army. This whole thing. So now I have a condo and a bordello across the street. Okay, the Oracle Ranch. Okay, go bunny that, mofo. This is the channel for no spreadsheets, no beta mails. I'm not going to be really nice to you and kiss your ass and be like, oh, thank you so much, everybody. I hope your portfolio is nice. And there was another guy I heard, the sweaty panda. Now, don't confuse the sweaty panda. He's so fucking boring. Okay? Oh my God, when I think boring, what pops into my head right away, right? The happy camper. Have you heard her? Oh my God. She could make paint undry from the fucking wall. The paint could be dry, and she could start reading her spreadsheet. It's so fucking boring. The paint just wants to leave. It drips off the wall. But I wasn't even going to talk about her. I wasn't going to talk about required on dividends or whatever his name is. We don't want to retire. We want to get paid now. What does your shit job pay you? We got people here making 20, 30,000 a month, 5,000 a month, 10,000 a month. I got people in my comments that are taking credit cards because you're an idiot. You're going to run up your credit card bill anyway, 10, 15, 20 grand. And then what do you got to show for it? Nothing. You got one of them fucking, what is that thing? What's it called? The table with the little knobs on the side and the little fake soccer guys. Tell me in the comments. You got one of those on your credit card? You probably bought a Pac-Man machine for your girlfriend. Stupid shit. Well, you might as well just get yourself some of these funds that are good. Don't go buy dumb ones. Okay? But anyway, the one that I'm waiting for, that's going to be the ultimate. I don't like diversification. That just means you're uncertain. So, and I don't, all right, I'll tell you what I want. I got Crash, that's good. I'm comfortable with that. I need a new sandwich. Okay, and I'm going to tell you what's going to be the perfect sandwich. Bitcoin. I know you all love Misty and all that. I have to do a separate video on this because you're not Bitcoin people. You're actually a bunch of schmucks when it comes to crypto. Okay? I don't want to piss in your Cheerios, but we're at the end of a bull run. It's my 3rd time at this hooker house. Okay? I know who smells like tuna and who don't. Trust me, I know a bull run when I can see it, and I know how they end. Okay? All of these ETFs, you're going to get destroyed. Now, so if you want to diversify, you don't want a single stock risk. You want to have some downside and upside gyration, like what's caused between Tesla and Crash. You want to have that synergy. The one to get that I'm looking forward to is Coney and Fiat. Fiat is a new inverse coming out by Jay and the midgets over at YieldMax. Okay? Hurry up. Step on it, Jay. We need it now. Here's the plan. Okay? Let's say I'm right and we're at the end of the bull run. Well, Coiny is going to crash. Okay? Coiny is going to crash because they hold a lot of Bitcoin and they're Bitcoin dependent. If Bitcoin tanks, and it has a habit of tanking hard when you least expect it, don't listen to the idiots on YouTube. They don't know. Okay? They're there to get subs and tell you what you want to hear so you come back and watch them. And then when it don't work out, they'll say, well, maybe it's going to be $100,000 the end of 2000, the beginning, first quarter 2025. So we want to have Coney, and we want to match it up dollar for dollar with the new one. As soon as Jay stops fucking around with the monkeys and the midgets and gets this going, okay, we could have Fiat and Coney. Now, Fiat is going to be an inverse of Coney. What does this do? This is going to create the same Tesla and and crash synergy, but it's going to take us away from the stock market. See, right now I have AMZ and I have Crash to give me some synergy, and that's all stock related. Now, how do we create the same kind of Tesla synergy with crypto? Okay, well, that would be by playing both for and against Coinbase. See, if crypto crashes, Coinbase tanks. Coinbase also, and again, right? If crypto continues to go up, Coiny will do great. If Bitcoin crashes, Coiny will do terrible, and fiat, the inverse, will do excellent. Okay, but both of them will be running as separate entities, running off really the volatility of crypto and the stock market, and paying you extra dividends. So you're not wasting your inverse on something like what Schmuckrock was telling you to invest in that is just an inverse. He's pulling shit out of his ass. He don't know. All right, this has been 20 minutes. I hope you're a subscriber now. I try to get to the point. I may be a little rough around the edges, but look, everybody needs to get hit in the face with a baseball bat sometimes when they're being stupid. So subscribe. I'm not going to beg you to like. If you like it, it helps the channel. If you like it, you like it. What does that mean? You click the thumbs up. But I'm not going to sit here and beg for that. But I do need you to subscribe so we can get to our 10,000 goal, and I'll have enough active people that I can make a private elite Discord for us to discuss strategies, okay, instead of spreadsheets. I hope you enjoyed this, okay? This was called The Inverse Idiots. Have a good day.